Hello, I'm David Mandy, President of O&M Partners. I want to welcome everyone today to the Endeavour Silver Corp's Town Hall webinar. Endeavour Silver trades on the TSX under the symbol EDR, and they also have a New York Stock Exchange listing, EXK, again, on the NYSE under the symbol EXK. For those of you who are new to these broadcasts, O&M has become the link between the non-deal investing public and public companies. In past times, these groups, particularly in mining, kind of passed each other like ships in the night. But our digital roadmap has enabled us to keep pace with the tremendous changes in investor demographics, not only during COVID, but just before COVID, even 6 years before, we watched a big shift in investing behavior, and how investors receive information. We want this broadcast to answer all of your questions. Questions can be easily answered by going to the question portal of GoToWebinar or by emailing us. For any questions that remain unanswered, we'll be sure to follow up in a timely manner after the call. For those who dialed in on your phone, the only way you'll be able to hear our pre-recorded introductory presentation is on your computer speakers. If that is not possible, you'll be able to hear the main presentation in about 15 minutes, so we hope you'll please stay tuned. Before we turn to our host, I'd like to introduce our special guest today, Peter Schiff. Peter is the president of Euro-Pacific Capital. Peter is internationally recognized economist, specializes in foreign equity, currency, and of course the gold markets. Peter has made a name for himself not only as the president and chief global strategist at Euro-Pacific, but he frequently delivers lectures at major economic and investment conferences, and is often quoted in the media from everywhere from the Wall Street Journal to Barron's and Business Week. His broadcast credits include regular appearances at CNBC, Fox, MSNBC, and also, of course, Wall Street Unspun. So on that note, I'd like to turn the call over to Peter.
All right, so I want to welcome everybody to this event, and appreciate the opportunity to speak with everybody. You know, I've been a long-term shareholder of Endeavour, going way back, and I'm looking forward to much better days, you know, not just for Endeavour, but for the whole sector, the mining sector, because I'm really looking forward to or forecasting the biggest rise in the price of precious metals, which would include, you know, gold and silver, really that we've seen. I think this is going to be the biggest bull market since the bull market of the 1970s. Now, you know, we had a pretty good bull market from around 2001 to 2011, where gold rose from the floor, the bottom of a 20-year bear market, where gold was under 300, and we saw a rise up to 1900. But that really just ended the prior bear market, right? That bear market began in 1980 when gold was around 800, 850 in 1980, and then was still below 300 20 years later, despite the fact that the price of everything else went up when you had 20 years of the CPI going up and stock prices going up, and you had this huge decline in both gold and silver. Remember, silver got to over $50 or about $50 when the Hunt brothers were trying to corner the market in 1980, and it was like $4 or so in 2000. So a spectacular silver bear market. So we got the relief rally. In fact, silver actually got all the way back up to 50 in 2011. But of course, $50 in 2011 didn't buy nearly as much as $50 did back in 1980. So, you know, adjusted for prices, it's a shadow of its former high. But nominally, we got back up there. But so we ended that bear market. We had this big rally. That rally peaked out in 2011. And the reason that we saw the peak was because the Federal Reserve was able to convince the world that it could do the impossible, right? That it could actually normalize interest rates after having kept them at zero for many, many years, and it could shrink its balance sheet back down to normal after blowing it up to 4.5 trillion. Now, I knew that that was impossible. I was warning anybody who would listen back then that the Fed could not do what it claimed it was going to do, that it was all bark and no bite. It was a big bluff. And the Fed bluffed about raising rates for a long time before it finally nudged them up from 0 to 25 basis points. And it took a long time before they started to gradually shrink the balance sheet. But as I said from the beginning, I said if the Fed ever tried to normalize interest rates, it would fail. If it ever took the first step on the journey of shrinking its balance sheet, that the journey would never be complete. The journey would not be completed. That the Fed would have to do an about face. And I predicted that QE4 would be bigger than QE1, 2, and 3 combined. And I predicted that the Fed would be back at 0. And that's exactly where we are. Right? The Fed reversed course on rates in the fall of 2018 when the market started to implode because rates had been moved up back to 2.5%. And that was too much for a overly indebted bubble economy to bear. See, that's the problem. When the Fed creates a phony recovery by levering everybody else with debt, they can't remove the debt. It's like you can't prop the economy up and then remove the prop, right? One of the jokes I used to tell back when I was doing conferences is I said, the Fed isn't just promising to do a difficult trick like pulling a tablecloth out from under the dishes and having the dishes stay on the table. What the Fed is saying it can do is pull the table out from under the cloth, and the cloth and the dishes are going to stay suspended in midair. It's impossible to do that trick. Well, it's impossible to get everybody all levered up and then raise rates. They can't afford it. And so the market started to implode, and the Fed did exactly what I said they were going to do. They started cutting rates. They went back to QE. They didn't admit it was QE. They said it was not QE, but it was QE because it was a distinction without a difference. The repo market blew up, and so the Fed had to step in and print money and buy up that paper to keep interest rates artificially suppressed because the market rate was too high for everybody to afford because we have too much debt. But then when COVID came, then we went straight to 0. The Fed didn't pass go, went right to 0 on interest rates, and QE4 is now already bigger than 1, 2, and 3 combined, and we're just getting started. Right? This is QE infinity. The Fed is now saying it's not even thinking about raising interest rates. So there is no way anybody in the world is going to believe the Fed if it even tries to bluff that it's going to raise rates one day or that it's going to shrink its balance sheet. So that is what saved the dollar and put a short-term top on gold. Well, we've now built a huge bottom in gold over the last decade, and we're about to explode higher. And the dollar is about to get killed, not only against gold, but against all the other world's fiat currencies. And there's nothing that's going to stop it. Because unlike 1980, when that bull market stopped with $800 gold, interest rates were allowed to go to 20% to stop that. They can't even go to 2% now. We already proved that. 2% is too high. How are we going to go to 20? So the Fed is never going to be able to allow rates to rise because of all the debt that it enabled everybody to accumulate by keeping them so low for so long. So fighting inflation is off the table. The Fed has to surrender to inflation. Inflation wins. It's a knockout. And it's the dollar that gets knocked out. The dollar was crashing back in the 70s. And Volcker saved it. But Powell or whoever replaces him, if we, post Powell, isn't even going to try. The dollar is what gets sacrificed to try to prop everything else up. The only way to prop up the stock market bubble, the real estate bubble, the bond bubble is to sacrifice the dollar, keep printing and printing and printing. And that attitude has never been, more on display than it is right now with COVID-19, because the U.S. government has basically said nobody has to work. Nobody has to go to the offices. Nobody has to actually earn a paycheck. We'll just send you the money. The Fed will just print up money and just replace everything that you're no longer earning, right? We don't have to work and produce. We'll just consume and we'll just print money and give it to everybody, and you just stay at home and buy stuff. That's the economy we have now, and we're running $4 trillion deficits. the government is talking about cutting taxes as it's increasing government spending. And so what's actually happening is the government has decided that it's going to fund itself mostly through inflation. In fact, right now, if you look at how much money the government is spending, the federal government is only collecting 40 cents out of every dollar it spends. So 60 cents is coming from the Fed, right? 50% more money is being printed and spent than taxed and spent. And the problem is the public doesn't realize what this costs. They don't realize that inflation is a tax. So they just want more free government. Give us more and more. Everybody wants more free stuff. And so that's what the politicians are selling, this bill of goods. And the world is going to have to look at this situation and like, we can't take this. No mas. We're out of here. We can't subsidize this. I mean, we've already subsidized these debts to the extent that the U.S. national debt is 27 trillion or whatever it is. We can't take it to 30 trillion or 40 trillion. The Fed's got a $7 trillion balance sheet. We can't let it go to 10 or 20 trillion. I mean, the world can't afford to underwrite this degree of profligacy. I mean, they should have cut us off a long time ago, but they got trapped in the dynamic of, throwing good money after bad and being afraid of the dollar crashing and them losing the value of the dollars they have. But in order to prevent the dollar from crashing, they have to keep on buying more. So in the end, they end up with a bigger loss because they have more dollars when the bottom drops out. So what's about to happen is the world is going to reject the dollar standard and go back to the gold standard. That's where we're headed. Gold beats all these fiat currencies hands down. And so gold was the reserve before the dollar, and it will be the reserve after the dollar. That's the only monetary system that works, right? It imposes discipline on governments, keeps them honest, prevents asset bubbles, and it facilitates trade because you have stability in exchange rates. So that's where we're going. So how do we get back to a gold standard from a dollar standard? Well, central banks need to buy a lot more gold. That's what's going to happen. And the price of gold is going to have to go a lot higher. That's it. You can't go back on a gold standard with $2,000 gold. Maybe $20,000 gold, but not $2,000 gold. Now, you could go on a gold standard with $20,000 gold if you let the price of everything else go down by 90%, but that's probably not going to happen. I mean, the political realities to have that kind of deflation is just not going to happen. So rather than collapsing the price of everything else, they just let the price of gold go up. And that's what happens. So if you get all these central banks that have very little gold that now have to come in and buy gold, the price goes up. Now they don't have to buy as much because the price is higher. And now the value of their gold reserves goes up. But it's not just going to be central banks that are going to be buying gold. Gold is going to be bought by institutions, pension funds, endowments. Everybody is going to have an allocation to gold in their portfolios. 5%, 10%, it's going to be commonplace. Now, when you have everybody in the investment world trying to have an allocation to gold mining stocks or silver mining stocks, even a small allocation, you're talking about all these whales coming into a tiny little pond of stocks. The prices are just going to go ballistic. So not only are the prices of the underlying commodity going to go way up, but the mining stocks, the premiums that they're going to trade at, because the whole sector is going to be in demand. I mean, one of these days, we are going to have a dot-com style bubble in the mining stocks. It's going to happen. We're not even close to that. We are still in the ground floor. We've just finished building this 10-year base, and we're getting ready for the next more powerful leg up in this market. And the great thing about the valuations, you look at these gold and silver stocks. Oh, look at Endeavour. What is Endeavour? $4, something like that. The vast majority of the mining companies are a fraction of where they were 10 years ago or 7 years ago. So we're still in the infancy of this market, because not only are these mining stocks not priced to reflect all of the gains that gold and silver are going to have in the future, they're not even priced to reflect the gains that they've already had in the past, because speculators don't believe those gains are going to endure. They're expecting the prices to go down, and they've already priced those expectations into a lot of these stocks. So there's so many ways the crowd is going to get this wrong. And that's how you make a lot of money, betting against the crowd. Well, the consensus today is that the central bankers know what they're doing, that they got the situation under control, that the dollar is sound. They're completely wrong. Right? This is a much bigger bubble than the dot-com bubble or the housing bubble. And I think betting against this bubble is going to be a lot more profitable than was betting against the housing bubble. But the best way to bet against this bubble is to bet on the gold and silver mining stocks. The real way to bet against this bubble is with gold and silver, and to make a bigger bet, you get into the mining stocks. And a lot of people say, don't fight the Fed. I agree. I'm betting on the Fed. That's why I'm buying gold and silver mining stocks. I'm betting the Fed is not going to do the right thing. It's going to continue to do the wrong thing. There is no precedent since Paul Volcker of the Fed ever doing anything right. Everything that's been done since Greenspan has been wrong. And I bet that trend is going to continue. Right? And that's why I'm owning gold and silver and these mining stocks, because I don't think they have the courage to do the right thing. And the longer they wait to do the right thing, the harder doing the right thing becomes, because it's a bigger bubble and the consequences are more severe when it pops. So I'm betting right there with the Fed. I know that they're going to keep printing money whenever the stock market drops, print money or lower interest rates, print money, lower rates, whatever. That's what they're going to do. And they're going to keep printing money until it has no value. And then what will? It's gold and silver. That's real money. And as I said, buy these stocks. And by the way, in case anybody is interested, I am a broker. I do have a broker-dealer asset management company. If anybody's interested in buying some shares of Endeavour, happy to work that order for you. Actually, we trade all around the world. So we can get you into the Australian market, Canadian market, any place there's a gold stock that we like, we can help you access it. So you can contact me at Europe Pacific Capital. I got the backdrop up here from my asset management company, Europe Pacific Asset Management. That's EuropePacificFunds.com is the website for that. And we trade with a lot of international clients through my asset management company. And so, yeah, if you have a portfolio and you'd like somebody who knows mining and mining stocks, it's a very specialized industry. I've got Adrian Day. If you haven't heard of him, he's been in the industry for 30, 40 years, got the best track record in the business. And then, follow me on social media. I'm doing a lot, my podcast on SchiffRadio.com. If you're not familiar with me, you can also follow me on YouTube on the Schiff Report, and I'm on Twitter, Instagram, Facebook, Peter Schiff. So make sure to follow what I have to say. And, I'm constantly talking about the financial news and the economy, and I'm giving out information that you're not going to get in the mainstream. Either they don't know it, or if they know it, they're too afraid to speak it.
Thank you, Peter. That was a wonderful, wonderful introduction. Now we'd like to turn to our host today, Bradford Cooke, who is the Chief Executive Officer of Endeavour Silver. Bradford has a deep background in mining. He was a professional geologist, is a professional geologist, I should say, an entrepreneur. Been over in the business over 40 years. He's has specialized in the formation, management, financing, the whole gamut of exploration of mining companies. He's been involved in acquisition. He's been involved in exploration development. He founded Endeavour Silver in 2003, and that was for the purpose of acquiring high-grade silver gold projects in Mexico. Since then, the company has acquired, rebuilt, and expanded 4 silver gold mines in Mexico and made a discovery with the potential to become Endeavour's 5th mine. So on that note, I'm going to turn the call over to Mr. Bradford Cooke. Bradford, to you.
So before I dive into the presentation, I just wanted to give people a flavor for how we started. In this cycle, as Peter Schiff mentioned, has been running really since 2000, 2001. In fact, gold in terms of US dollars bottomed in March of 2001 at about $250 per ounce. And by late 2002, early 2003, gold broke through $300. So, a massive 20% move. And yet silver was still flat on its back at $4.50. So that was really the time when I realized that it was a good opportunity to form a silver company. Anybody who's been through a precious metal cycle knows that wherever gold goes, silver follows, and yet silver typically lags behind gold. In 2003, we were staring at such a lag, and that's why I founded Endeavour Silver. We chose Mexico because it's close to home and it's grossly underexplored. We felt there was tremendous opportunities to build a silver company based on Mexican assets, and got very fortunate. Having toured a number of exploration type projects in 2003. We were fortunate in November of 03 to walk through the gates of a fully built and permitted mine called Guanacevi that had closed for lack of ore. And yet when we did the mine and plant tour, we recognized that there was phenomenal exploration potential and virtually no effort to do exploration, especially drilling, to find virgin ore bodies hiding below surface. So that was really how Endeavour got its start. Anyway, without further ado, why don't we dive into the presentation entitled Driving Organic Growth. Organic growth is probably the best way you can differentiate Endeavour Silver from our peer group in the silver mining business. I will be making some forward-looking statements today, so you are duly cautioned. And Endeavour today is considered to be a mid-tier producer of silver and gold. We own and operate 3 high-grade underground mines in Mexico. We're just coming off the end of a 6-quarter operational turnaround to reduce our costs and boost our productivity. As I mentioned, we have the best organic growth profile in the sector. Every ore body we've developed, every mine we put into production was on the back of a discovery made by our exploration group. So we do live and die by the drill bit, even though we're a mining company. We have historically pulled the trigger on opportunistic mergers and acquisitions, typically at the asset level. And we continue to scour the planet for opportunities today. And last but not least, amongst all the silver producers, Endeavour is one of the very few that produces only silver and gold. We have no copper, lead, zinc, or other metal production. And as a result, we have the best leverage, the best beta of our share price to the silver price in the sector. So head office in Vancouver, BC, all of the core assets currently located in Mexico, and an exploration portfolio to be drilled in Chile. Currently about 2,000 employees and contractors. And if I could do a quick tour of the assets here, our first mine, Guanacevi, is located in northern Durango state. Second mine, Bolanitos, in central Guanajuato state. Our fourth mine, El Cubo was our third mine, now closed. Fourth mine, El Compass, is located in Zacatecas state. And then we have this development pipeline. Next up would be Terronera discovery in Jalisco, followed by our Parral discovery in Chihuahua. Some recent highlights, even with an abbreviated production profile due to a government mandated shutdown due to COVID, we lost basically 2 months in our second quarter. In the first half, we were able to produce 1.5 million ounces of silver and 14,000 ounces of gold for about 2.5 million ounces of silver equivalents. Thanks to the operational turnaround that was launched 6 quarters ago, we've seen significantly improved financial performance in the first 2 quarters of this year. And in fact, in Q2, each mine generated positive free cash flow. The mines still have some upside to give. Guanacevi, even though it outperformed plan, is still, I think, got more tons, more grade, more recoveries to give. Bolanitos, which was slightly below plan in the second quarter, should be on plan and exceeding plan here in the second half of the year. And El Compass is chugging along at plan. Moving to our exploration and development pipeline, I mentioned that the Terronera project was up next. We've taken some time, the last couple of years, doing economic studies on what we found at Terronera, currently about an 80 million ounce combined reserve and resource, silver equivalents, of which I believe over 70 million ounces is in reserves. And the latest iteration was published about 6 weeks ago, giving us a net present value of $137 million at a gold price of around $1,400 gold and a silver price of around $16. That generates a 30% after-tax internal rate of return with a 2.7-year payback of the initial capital invested. Initial mine life's 10 years. We think it'll be much longer with additional exploration. And the life of mine all-in sustaining costs are incredibly low, $2.10 per ounce of silver produced. And even today, after 13 years of operations at Bolanitos, we're still finding new high-grade veins. Even after 17 years of exploration at Guanacevi, we're still finding high-grade veins. Our revenue split this year is about 50-50 silver gold, and as you can see from the pie chart, Guanacevi is our largest mine. So let's have a tour of the assets. First up is our Guanacevi mine, purchased in 2004. This is the one that I visited in November of 03, fully built, fully permitted, shut down because the Mexican owners had thought they'd run out of ore. We begged to differ. We structured a $7 million purchase deal and got to work in May, June of 04, exploring the high priority targets that we had selected. By July, we had announced our first high-grade new discovery, virgin ore body hiding below surface. And by September, we colored a decline to develop that discovery. In December of 04, we were in production. 6 months from signing the deal to finding an ore body, to developing the ore body, to production and cash flow. And we really had our eyes opened by that business model. It became the Endeavour model, which we nicknamed fully built, permitted, and closed. So the operational turnaround needs, I think, some explanation at Guanacevi. For many years, it was our main mine, and we were a lowest quartile cost producer. But in 2018-19, we fell on hard times. Why? Well, we were still mining the original discoveries from 2004. And instead of being shallow, thick, and rich, as they were historically, we were now 700 meters deep. We were into the low-grade portion of these veins, and the grades had fallen. So it was unfortunately not a formula for success with such low metal prices during the bear market. And we took operating losses in 18 and 19, largely because we had a plan to close these original mines and open up new mines on new discoveries that we'd made in recent years, but were delayed by the permitting and therefore the mine development. I'm pleased to say in January of this year, we completed the operational turnaround at Guanacevi. We turned off the old mines, the deep mines, and turned on 3 new high-grade mines that are much shallower, and that's shown on the chart here on page 7, with rising tons from the mine to the plant. It's up to 1,050 tons per day in June, actually more than that now, and the grades rising to 412 grams per ton of silver equivalents in June. And the life of mine for the rest of the life here should be around that mark. So a wonderful turnaround from being our biggest money loser last year to our biggest money maker this year at Guanacevi. And so you can see it in the costs. Even with the 2-month shutdown in Q2, we were in the money on costs, and still improving here in Q3. I think long-term, we'd like to see the cash costs here about $5 and the all-in costs between $8 and $10, which is where we were historically. So let's move to our second mine, Bolanitos, in the famous district of Guanajuato. We acquired this mine in 07 and went on quite a run, making numerous high-grade discoveries in 08, 09, and 2010. Between 2009 and 2018, Bolanitos was actually our most profitable mine, generating over $200 million of free cash flow during that period. And yet in 2019, it also fell on hard times due to exactly the same reasons as Guanacevi, staying too long in the original ore bodies, ending up trying to mine narrower, lower grade, and deeper ore in a bear market when we should have just closed them, which we did here in the last quarter. And now we're focusing on 2 new discoveries, San Miguel and Mayadito. So what does that operational turnaround look like? Again, the grades fell as low as 40 grams per ton silver and 1.45 grams per ton gold. And now we're seeing a significant lift in both silver and gold grades. We did some massive improvements at Bolanitos to turn that mine around. We revised the mine plan, acquired new equipment, accelerated the development of the new ore bodies, discovered more new ore bodies, and basically improved the availabilities at the mine and the plant. In terms of tons per day, we bottomed at 778 tons per day at this time last year, and now we're cruising along at north of 1,000 tons per day. So there's still more to give here. We have a 1,200-ton plant, and still the final stages of development at San Miguel and Mayadito. But nonetheless, we expect to break out into the black here in the third quarter at Bolanitos. Last but not least, our fourth mine, El Compass, was acquired in 2016, came to production in March of 2019, and it's the south end of the famous Zacatecas district. We are chugging along at close to the plant capacity of 240 tons per day. And it's primarily a gold mine. It'll never be our biggest money maker because it's so small, but it is in fact very profitable. If you look at the costs in Q2, negative $97 cash costs, that's because the gold credit is basically almost the entire revenue. And the all-in sustaining costs at negative 48. So those are the three operating mines, and all of them are making good money, obviously, at current prices, with the costs still coming down. Let's move now to our development pipeline. First up is our fabulous Terronera discovery in Jalisco State. Terronera represents what should become our largest and lowest cost mine. It's truly our next core asset. It's a district scale opportunity covering over 17,000 hectares. We've now mapped and sampled over 50 old mines. We've made two bona fide new discoveries, the Terronera discovery and the La Luz discovery. We stopped drilling 2 years ago when we got to more than 80 million ounces of combined reserves and resources. And we've been focusing on economic studies since that time. The most recent pre-feasibility study was released about 6 weeks ago, indicating that we can produce 3 million ounces of silver and 33,000 ounces of gold here for at least 10 years. That's about 6 million ounces of silver equivalents at an 80-to-1 ratio. What makes Terronera special is that the ore bodies are shallower, thicker, and richer than our other mines, and therefore the economics are better, pure and simple. Look at the cash costs. Basically, the cash cost in the latest economic study for the production of silver net of the gold credit was zero. In other words, the gold covers for all of the costs to run the mine, and the silver is effectively free. Even on an all-in sustaining cost basis, and let's define that. Cash cost is basically the cost to run the mine for a day, cash in, cash out. All-in sustaining costs includes life of mine capital investments, life of mine exploration expenditures, life of mine taxes and royalties and head office costs. And even on that all-in basis, we're estimating a very low $2 per ounce of silver produced for the cost of this mine. So it will be one of the lowest cost mines in the entire silver sector. We found it and we're now proposing to build it. There are three cases here shown on this slide, and we published the base case with $16 silver and $1,400 gold. But take a look at the, just finish my screen here so we can look at the current case, the current spot prices. The net NPV almost triples to $350 million. The IRR doubles to 65%. Payback period shrinks to 1 year. And on an after-tax free cash flow basis, this mine will generate at current prices almost $60 million after tax every year. So it's a phenomenal opportunity for the company. This graph shows the silver production, gold production, and silver equivalent grades in the red dots. And we front-loaded the grades to speed the payback period of the mine. But even at the end of the mine, the grades would be in the top quartile of grades produced throughout the silver sector. As we go now to feasibility, today we announced that we're moving to a final feasibility stage here. It will take about 9 months and $1.5 million to complete feasibility. So we're already on the doorstep of full feasibility. And even though the purpose of the feasibility study is a final de-risking of the project, there are still significant upside opportunities we hope to capture in the feasibility study. We're currently staking more ground at Terronera to expand our footprint. We've just restarted 2 weeks ago the drilling to expand the resources at the site. We're now evaluating the potential to expand the proposed mine and plant. We're evaluating optimizing our mining methods through more geotechnical drilling to allow for additional low-cost long-hole mining. We're actually looking at an automated underground rail haulage system that wouldn't require as much ventilation as typical diesel truck haulage and at a significant lower cost than truck haulage. We're evaluating electric equipment so that we can be as green as possible, and again, to minimize the amount of ventilation required underground. So significant opportunities remain to be captured here at Terronera. Next steps, we just launched the feasibility study. We've been adding to our project development team, led by our Director of Project Development, Ernesto Lima. We're now entering into the engineering, procurement, construction, and management process with contractor bidding and selection. We've just extended some permits so that we could get started on long lead items such as mine and plant development, and we're evaluating other upside opportunities. So that's Terronera, and we wish to invest $100 million starting in about 18 months' time, 24 months' time, and we would see initial cash flow in early 2023 at Terronera. Our Parral discovery is intended to follow Terronera in the development pipeline, and it's got already a 40 million ounce combined resource. We think the opportunity to expand that resource is significant. This is a historic operation producing 4 million ounces a year, closed in 90. And there was 4 historic mines on our current properties: Veta Colorada, San Patricio, Palmilla, and Cometa. It will remain in advanced exploration and early stage permitting for the next couple of years while we focus on Terronera, but Parral truly is going to become another core asset following Terronera. And last but not least, we have a portfolio of world-class prospects to drill in Chile. We assembled this portfolio during the heart of the bear market when nobody else was doing what we were doing. And you can see from the photographs that these are massive alteration zones, measuring kilometers in each direction. That little red dot in the top photo is our truck, pickup truck. And we're very excited to be in Chile. Why are we in Chile? Well, I get that question from a lot of shareholders. Very simply, we're going to produce about 6 million ounces of silver equivalents this year, and Terronera, when it comes on, will add another 6 million ounces of silver equivalents for an almost doubling of our production. Terronera, historically at 4 million ounces, we conceptually want to bring it back at 4 million ounces. So from 6 to 12 to 16 million ounces. It's hard to grow the company after that. At 16 million ounces a year, adding 2, 3, 4 million ounces from new opportunities just doesn't do a whole lot for us. So the whole purpose of Chile, given that every mine we've built was based on our own exploration discovery, is to get into a new discovery of world-class potential. And we have 3 of them. Cerro Marquez, which is a bulk tonnage porphyry copper play. Because copper is not core to our business, we're currently shopping it with major copper producers to effectively partner the project going forward. Paloma, which is a high sulfidation gold silver project in northern Chile, and that's similar to the 4 million ounce Solaris Norte discovery. So it's a big target, and we'll start drilling it here in the 4th quarter. And then last but not least, Aida, which we hope to drill next year. It's a 200 million ounce silver project. So all of that adds up to a sector-leading organic growth strategy. We have some of the best cash flow leverage in the business, thanks to not only the rising metal prices, but our falling production costs. It's almost a perfect storm in our cash flow. We have some of the best leverage to growth in the business through our organic growth pipeline of Terronera and Parral. And of course, 3 swings of the home run bat, trying to find a world-class discovery in Chile. Our cap structure is currently 155 million shares out, about a $650 million market cap. I showed you the spot case on Terronera. Almost 2/3 of our current market cap can be found in the net present value of Terronera alone. For a mid-cap company, we actually do tremendous volume. Today's a bit of an off day at about 2 to 3 million shares per day. But in the last 3 months, we've averaged 7 million shares per day. That's almost $30 million of turnover daily. For a mid-cap company, that's pretty special. Listed on big boards on Toronto and New York, working cap at the end of the quarter was $45 million, cash position 30. Both of those have grown substantially here in the 4th quarter. Major shareholder, the VanEck GDXJ Index Fund, has a 6% position in the company, and the largest silver mining company in the world, Fresnillo PLC, has a 2% toehold in the stock. 10 analysts cover the stock, and our sector-leading beta is a 1.6 times the silver price. So catalysts going forward? Well, obviously finishing off this 6-quarter operational turnaround, which should be done here in the next month, to continue reducing our costs. Obviously optimizing Terronera with the full feasibility study now finally underway. Extending the mine lives through continued drilling around the 3 operating mines. And of course, going after a world-class discovery in Mexico, or in Chile rather. Last but not least, we're always accretive in terms of growing through M&A. And while we can never guarantee new acquisitions, we're certainly lucky. So why invest in Endeavour? What you get with Endeavour is a mid-tier silver producer who, through the development of our own organic growth profile, will become the next senior producer of silver in the space. We're run by an experienced management group who've been together for years. We have a strong balance sheet with no long-term debt, and we're a pure silver gold play. So thank you very much, and let's open it up for Q&A.
Thanks, Bradford. Great presentation. Well done. We're going to start today with our questions. We're going to start with Doug Loud.
Okay, can you hear me, Brad? Doug Loud here.
Absolutely. How you doing, Doug?
The Mexican government has been somewhat transitional over the last 4 or 5 years, and I was wondering, have you had issues with taxing authorities, government authorities, permitting issues, any of those kinds of things?
So we got whacked by the previous administration on the tax side in 2013. The then government boosted taxes, primarily the EBITDA tax, which is very punitive, and the precious metals royalty. So that basically took Mexico from being a heavily preferred financial jurisdiction to simply being the same as Canada, Chile, or Peru, and not as good as the USA. The current administration, even though they're a socialist administration and with clearly different agendas than mining, have pretty much left us alone. And they have been somewhat helpful when our mining group in Mexico has run into specific issues, whether they were community issues. And I'm not talking about Endeavour, I'm talking about my peer companies. And we, Endeavour, are very fortunate that our 3 mines are located in very historic areas, very peaceful areas. We haven't had any drug issues. We haven't had any labor issues. So we're very fortunate from that point of view. I like Mexico. I think it's still a desirable jurisdiction. It's got phenomenal discovery potential, even 20 some odd years after it opened up. But in terms of financial performance, it's not much different than Canada or Chile.
That was my other question. I'm fascinated by the Chilean projects, having been there. Are those in the Atacama? Where are they in Chile?
Yes, they're in the Atacama, in the far north. Aida is actually on the corner of Bolivia, Argentina, and Chile, and Paloma is about 30 kilometers to the southwest of that. We're in the very young Miocene belt, which is the home to the largest historic gold projects and copper projects in Chile. And the far north is relatively unexplored because there's, let's call it less infrastructure there, even though Paloma is 3 kilometers off a paved highway and a natural gas pipeline, and Aida is only about 20 kilometers off the same infrastructure. No Chilean has explored up there. It's amazing.
I mean, to say that it's infrastructure challenge when you're in the Atacama to start with, where there hasn't been any rain for 50 years is a fascinating answer. I like that very much. That's very interesting because Chile could be really very exciting. Very interesting. Thank you.
Yeah, thank you.
Thanks for your questions, Doug. We're going to turn to George Petker, please. George, question today for Bradford?
Yes, am I unmuted?
Yes, you are, sir. We can hear you.
Okay. I just wanted to see, Brad, we've met several times. I just wanted to see with the, great amount of historic items and mines that you have in Mexico, what are your recoveries? And are there any potentials where new technology could improve your recovery rates? Or are you pretty satisfied with what you're getting?
Our recoveries across the 3 mines are typically in the 85% range, plus or minus. I think actually Guanacevi is having a good run in the plus 90 range right now. And there's always room to squeeze more metal out. I think it's almost free metal if you can get an extra couple of percentage points out of your recoveries, because you've already paid for the discovery, the development, the permitting, the financing. You've already paid for the mining and the transportation and the crushing and the grinding. So absolutely, we're always interested in new technologies, and We have done better. In the early days, we were probably closer to 80%, and so we're doing better than we have done historically. Always interested in new ideas, though.
Good, thank you. We'll be in touch.
Thanks, George.
George, appreciate your question. We'll turn to Malcolm Gisson. Malcolm, we'd love to hear your questions. We usually have Marshall on the line with us. It's a pleasure to have you.
I'm on a conference call, a program. Hang on a minute. Can you call me back in about 10 minutes? Thanks. Bye-bye. Am I unmuted?
You are.
now, Malcolm. Yep.
Brad, can you talk a little bit more about the new technologies that you're experimenting with and the impact they will have?
Yes, and hi, Malcolm. How you doing?
Fabulous, except I miss going out for ice cream with you.
We have some new ideas if you ever make your way back up here.
You know how to get me up there.
Okay.
Sounds like ice cream.
No, it's learning more about the company and its fabulous potential.
Yeah.
Yes. So, of course, adopting new technology brings mining into the new age, into the age of the green revolution. And really, Terronera is our first opportunity to embrace new technologies because the existing mines were all basically already built. And while we've modernized them, there's limits to what you can introduce in these older infrastructure. So at Terronera, let's start with our power supply. We are looking at natural gas power supply because it's readily available. And we'd love to find a home for natural gas instead of diesel. We're actually looking at powering some of the plant and office facilities with solar power. And we're just doing a trade-off study now between putting one solar installation in or actually buying it from an existing solar producer who sells to the grid. The underground rail haulage that I mentioned is being used commercially in Europe. It's an electric train that can actually climb a slope. And so it is in commercial use. We're intrigued by this because if we could have automated haulage with basically it's a video game operator with a console on surface, and the train just shuttles like a metro from the mine to the plant to the mine to the plant with automated loading and automated unloading. So we're fascinated by this concept. We're doing a much deeper dive to see if it's makes sense for us to adopt. And you know, I'd love if we pull a trigger on something like that because the economic benefits are there's a higher capital to install it, but much lower operating costs, like almost 10% of truck haulage, and of course a fraction of the ventilation with all that diesel that you'd be emitting underground. So there's I think a very important technology. And then the last example I'll give is we're evaluating electric drills, electric scoops, electric underground haulage. So again, to minimize diesel emissions and minimize ventilation.
Okay. Can you talk a little bit about your new COO?
Yeah, today we announced that Don Gray is joining us as COO, and our founding COO since inception, Godfrey Walton, has announced he's retiring at year end. So we're going to miss Godfrey. He's been with me since we started. But Don has got a fabulous resume. He just came off of the discovery and development of the Buritica gold mine in Colombia for Continental Gold, and then helped to facilitate the sale of that company to Zijin, the Chinese concern. So he's done the whole gamut from discovery through sale. And before that, he had been the general manager and then vice president in charge of the construction and operation of the magnificent Escobal silver deposit in Guatemala for Tahoe Resources before their sale to Pan American. So Don's got a tremendous resume. He's going to bring his expertise and his experience, expertise, and leadership to bear on pulling more value out of our assets, particularly the new ones, Terronera and Pearl.
Will he be involved in selling the Chilean asset? Or joint?
Well, as the chief operating officer, his main role is actually the operations and the development projects. And I think that's where we can get the most out of his skill sets. Chile will remain in the hands of our VP Exploration, Luis Castro, until we have something that's far enough along and large enough that he can pass it off to the development group.
Thank you.
Thanks for your questions.
Thank you, Malcolm. Appreciated your questions. We'll turn to Murray Vanderbilt, please. Murray, questions today for Brad?
Can you hear me?
We can,
Yes.
Murray.
Okay, so Brad, the question is, for a new person, you threw it all together. Did you say a PFS for the Terronera mine is coming out shortly?
No, we published one 6 weeks ago, and it's actually our third PFS. So now we're moving to full feasibility, and that's targeting next summer.
Okay, can you and you say currently you're producing about, without COVID, you'd be producing about 6 million ounces a year?
We had initially guided 6 to 7 million ounces of silver equivalents this year in January. We haven't revised our guidance yet. We withdrew it when COVID arrived. We haven't announced any changes. And based on our Q3 production, we're thinking, but we're not yet ready to publicly guide, that we'll actually meet the bottom end of our original guidance. So we're trying to get to 6 million ounces of silver equivalents.
Well, basically, ex-COVID, you think you can run at 6 million on the existing mines?
Including the 2-month shutdown.
Yeah, all right, so do better than that. And then you're
Yeah.
going to have a full feasibility study mid next year. And if I were to go back, do you show the reserves and resources for all the existing properties? There were pieces there about the sustaining cost of what the production of each mine is. In other words, if I want to dig into it, it's enough of that's there, or can you summarize it quickly on the now?
So for a detailed breakdown of the reserves and resources company-wide, I would simply direct people to our website, www.edrsilver.com. You can find that in several places. It's also in the presentation. The presentation I gave today, it's buried in the appendix. So what I highlighted were the reserves at Terronera. I think the reserves are at 66 million ounces and the resources are at 14 million ounces for a combined total of 80 million ounces at Terronera. And the combined total at Peral is sitting at about 40 million ounces.
Okay, well, I'll do some homework and maybe catch you later then. I think it's the best way to deal with it. Thank you.
Thank you, Murray. We'll turn to Nick Polidris. Nick, question today? Nick, you're unmuted.
Oh,
We can hear you now, Nick.
okay, yeah, no questions. It was an excellent presentation. Thank you.
Thanks for being on the call. Turned over to you, Scott, for any questions from the audience.
Yeah, we do have some from the audience. 1 second here. We want to thank the audience for sending in questions. If you still have questions, please use the question panel on the GoToWebinar control panel, and we'll get those questions answered today. First question from the audience is, can you please talk about your major shareholders and the breakdown of insider share percentages?
The largest single holder is Van Eck with the GDXJ Index Fund at 6%. There's a number of institutional holders, probably in the order of 4 to 6 in the kind of 2 to 4% range. Fresnillo PLC, the world's largest silver miner, is at 2%. Insider holdings as a group total about 4%. I'm about half of that, but with my options and PSUs and whatnot, I'm probably at about 3% total.
Thank you. Here's a question. Hello, Brad. Is an HIG mill feasible as recently incorporated by First Majestic?
We did take a look at the high pressure grinding mills for Terronera, but they did not make economic sense. So we're going with the traditional ball mill. And I should just say that technology like that usually has a very specific use for a specific type of ore and just didn't work for our ore.
Thank you. And next question is, some producers in Mexico have had problems with theft and security. Can you comment on your security plans?
Well, security has been a concern since we arrived in Mexico. We actually, for many years, had unarmed security on the basis that if anybody wanted to rob us, they would have more and bigger guns than we did. But of course, over time, we recognized that some of the theft that we could be facing would just be small scale stuff. So we have many years had armed security at each of our sites, and it's an independent contractor, and we move them every 2 weeks so that they can't get embedded and get up to no good. In terms of our experience with security in Mexico, it's been very good. We have not had any armed incursions or anything like that in our now 16-year history in Mexico. That's because our 3 mines are in very civilized areas. And, it's really the higher risk areas that where mines have issues, and we're not there.
Great, thank you. The final question so far from the audience is, can you speak about the marketing efforts you're now doing in the United States? Is there a reason behind the step up in marketing?
Well, I think that we haven't changed the volume of marketing that we do, but given the COVID phase that we've been in since March, with every conference and every road trip, every shareholder meeting canceled, we've effectively replaced that with virtual online calls, webinars, etc. And so that's why we're doing this today, is that we had done previously with David Mandy some roadshows in the New York area, and this is a great opportunity to speak to an even larger audience.
Great, thank you. Well, that is the questions from the audience. We want to thank everyone for sending in their questions today. If anyone still has questions, please do send them in. Be sure to get them to management and get them answered for you.
And thank you all for attending.
Thanks, Brad. Any further comments that you'd like to make?
I think I'll just reiterate the reasons to own Endeavour, the catalysts to make the stock rise. In fact, I'll just focus on one. I mentioned that we had 2 of our 3 mines enter into loss territory in 2018-19, and that through the operational turnaround, they're back making free cash flow. But we haven't yet had a financial quarter where we showed we made money. Because think about it, we were still in the turnaround in Q1, and then we faced a 2-month shutdown with COVID in Q2, where we burned $5 million just standing still, care and maintenance. So I think once we post our Q3 financials and show just how vivid the operational and financial turnaround has been for the company, that will be like the starting gun. And our stock was sent to the penalty box in 2018 and 2019 for significant underperformance, and we've only really emerged from the penalty box here in the second and third quarters of this year. We haven't, I believe, caught up to the valuations of our peers, far from it. And again, once we post 1 or 2 good financial quarters and profits, I think it's game on. So if you want one catalyst, that's it.
Great way to end it, Brad. Thank you so much for taking the time to present. I appreciate everybody's attendance and your questions, and wish you a very pleasant afternoon. Take good care.